This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hey guys, hello again. My name is Matteo Rizzi, the executive producer of Breaking Banks Europe. Welcome to today's show in a new format called Open Innovation Series. In the past decade, especially in our industry, there are a lot of examples of how innovation has been deployed, collaboration has been installed between incumbents and startups. And this series is going to talk about different ways, success stories, failure stories, experiences, and everything around collaboration and open innovation. We have 4 amazing guests with us today from 4 different nationalities, 4 different corners of the planet, very different experiences. I think we're going to have fun. As usual, let me introduce themselves by leaving them the floor for a couple of minutes. I will start by Noémie, that I see on my left hand on the screen. So there is in no particular order. Noémie, welcome to Breaking Banks Europe.
Thank you, Matteo. I'm very happy to be with you. So I'm representing here Société Générale, which is a big international bank acting in retail banking as well as in capital markets, private banking, and all financial services across the world, across 61 countries. And I am head of the digital group strategy in the innovation division for the group, so attached to general management and supervising digital strategy for all these activities and geographies.
Thank you, Noémie. And now let's go to Belgium. Edwin, welcome for the first time to Breaking Banks Europe.
Thank you, Matteo, and I'm glad to be on this podcast and to be able to contribute to this exciting subject. So I'm Edwin De Pauw. I'm in charge of data services and innovation at Euroclear. Euroclear is a central securities depository. It's a market infrastructures in the securities industry. And our role is really to contribute to Euroclear's growth, either by leveraging the data and data insights that are available in Euroclear, or by leveraging new technology, leveraging new business model, and inventing new product lines.
Great, Edwin. And then let's go over to Middle East. Gavin, welcome to the show. You and I have been in other shows recently, but welcome to this one.
Thank you, Matteo. It's awesome to be here and awesome to meet the crew. This is really exciting. It's my first time on any kind of formal podcast like this, so it's a big deal for me. So it's good to be here. Thanks.
So cool.
It's awesome. It's awesome. So I'm from First Abu Dhabi Bank, or FAB as we call it. My particular role, I head up a group of misfits in the bank called Fabric. Fabric is the Fab Research and Innovation Center. We're essentially the innovation lab for the bank, and there's lots of very interesting stuff that we work on. One of them, of course, being all things fintech. So very excited to be here and part of the conversation.
Thank you, Gavin. Last but not least, our friend Diego, representing one of the Spanish leaders in this movement. Diego, welcome to the show for the first time.
Thank you, Matteo. Thank you for having me today. Thank you, everyone. My name is Diego Calascibetta, and I work for Santander, for Banco Santander. I'm originally from Argentina. I'm based in Spain. I've been working for Santander for my entire professional life now. That means around 17 years. Within this journey, in these 17 years, I've been lucky enough to have had the opportunity to cover many different roles, although I can say that majority of them were in the operations, technology, projects, maybe organization as well, departments. And also had the opportunity to be based in 4 different countries, Argentina, Chile, Spain, and Hong Kong, in 3 different continents. Right now, I run a business unit that is called FinTech Station, where we basically look to connect our different business units at pain points or needs that they have with the best tech companies out there in the global ecosystem. And we do this with the aim of building strategic and long-lasting partnerships. So yeah, thank you for having me again.
Thank you, Diego. So let's sort of start this conversation with a bit of like an opening statement, okay? So none of you, without sort of asking for your age, are like a new kids on the block, right? So you've been working for your institution for a little while. And it is true that for the ones that sort of tried back in 2008, 2009, back at my time at Swift, to talk about collaboration, startups, entrepreneurship or intrapreneurship in large financial institutions was kind of a challenge. You really were looked at like a dissenter or someone who really sort of came out of the blue. Like more than a decade later, I don't think it's a matter of if it is good to collaborate, or about how. What is the best way. I hope that you all agree with me to start with, but I want to understand a little bit what's your take and why you agree with me, and how have you seen in your own institutions, but also in your experience, this sort of urge for collaboration sort of developing in the past year. Let's take for this round the same sort of the same order that we did for the presentation. So Noémie, over to you first.
Thank you, Matteo. Yes, I absolutely agree with your statement. I think there is two different arguments to agree with you. One is, let's say, external, looking at the environment, looking at the way we are disrupting in all our businesses in financial services and all our customer segments and all our business in across the geographies. So definitely there is something about the environment which requires from the financial players to have great ambition, both in terms of transformation of the existing business model and in terms of creation of new business model, which are, I think, the 2 main motors of our digital strategy in financial services. So this great ambition requires, I think, cooperation. This is, let's say, for the environment part. And for maybe more an internal testimony coming for Société Générale, for us, it has been for a long time a tradition, or let's say it has been part of our pioneer spirit to be really connected to the ecosystem. And it also goes with the fact that we have chosen since the beginning to have a digital transformation strategy and an innovation strategy, which is very decentralized, embedded in the reality of all the collaborators, in all the business model, in all the geographies. And this makes that partnerships or cooperation really comes for the ground. So it's a reality for everyone in the bank. And this is the way I would say that it's not a if, it's a how and when and with whom, So yeah, this is the way I would develop on what you are saying.
I would like to add to that. I think indeed. I think we passed the question if we need to collaborate, because I think there are a huge number of benefits. But I think before you can ask the question, how do you want to collaborate? I think you first need to ask the question and answer the question, why do you want to collaborate? I see different reasons why one would like to collaborate with startups and fintechs. Often in our case, I think there is the market research angle, understanding what's going on in the market, how people who are less knowledgeable about the business would redesign our business. I think it's also, to a large extent, in many companies, a way to further accelerate growth, often in a non-organic way. I think it might also be a way to enter into a new ecosystem, to facilitate partnerships, where partnerships are not always easy between incumbents. And if you have a sort of fintech enabling that collaboration, I think that could also be a good reason. There is the obvious financial return, but what we also see is new capabilities, to build the new capabilities. And I think it's only when you have asked and answered that question, and that everybody understands what is actually the value they bring to the table in the partnership, in the collaboration, that then you can start thinking and reflecting on how exactly what do you want to collaborate. Do you want to do this at arm's length? Do you want to be closer collaboration? Is it more just a reputation, things like that? So that's the way I think the why is an important question to answer.
Yeah, I think just to jump in there, I think collaboration is a must, right? I think it's we must do it, and I think there's an internal collaboration as teams, and how we as innovation functions support teams to come together and collaborate. And I think maybe, guys, we can touch on that a bit in a bit, but I think in terms of outward collaboration with fintechs, and I think Diego just said something early on in his intro, and I was like, he said something about starting with the problem or solving real problems. So I think collaboration, to me, what's important to add to what you guys are saying is that there's a right way to collaborate, there's a better way to collaborate, but also there's a very easy way to get busy with fintechs and partnerships and do the whole fintech thing and do the accelerator thing. And hey, we're partnering, we're collaborating, but nothing's actually really coming out of tangible value versus the effort that you put into it, right? So I think in terms of successful collaboration, we want to be good partners with the fintechs and the ecosystems that we plug into. We want to make sure that we're primed for success for kind of meaningful kind of collaboration, starting to look for those problems and working back from the problems, as opposed to looking at fintechs and trying to pitch ideas inwardly to the teams. I think it's super important, And the second thing I'll say in terms of successful collaboration, in terms of like fintech or with outside technologies or platforms or entrepreneurs, one of the things that we work on internally as a team, because we do a lot of kind of the design thinking and service design and helping to bring teams together internally to look at unmapped journeys and to solve what a whole journey could look like. And when you bring teams together to collaborate and look at a particular problem or a particular journey, everyone can easily come to the same conclusion or the same kind of thought process that there's something there that maybe we should reach out and tap into a fintech. So before you even contact and look to collaborate with a partner, everyone's kind of behind you and everyone agrees that this is a sweet spot where we should do collaboration and we should reach out. So I think successful collaboration, I think priming to do successful collaboration is as important as just doing it because it's very easy to do, right? Very easy to do in today's world.
I cannot agree more on everything that's been said so far. For us, let me explain a little bit what I was saying before in my introduction when I was mentioning that we focus on building strategic partnerships, right? There's 3 ways, at least, I can imagine our bank collaborating with companies. Typically, these 3 ways are, first, the bank willing to create a new product or to launch a new product or a new service to our customers. Therefore, building a partnership type of relationship with a fintech, let's say fintech company, that will enable us to go faster to market. Time to market is crucial here. This comes mainly in the form of white labeling third-party technology to go faster to market. Because here we have to remember that usually big banks or big corporations, we all have the capacity to build in-house solutions. But if we put ourselves to do that, then by the time we reach out and have a really useful solution, probably the market is way ahead of ourselves, and it's going to be way too late. So that's one, building new products or services using third-party technology. The other 2 ways in which we foresee collaborations typically are the bank selling or using fintech companies as a new channels of distribution of our products, right? So we, as a bank, selling our products through third parties channels, and the other way around, which is having fintech or tech companies, selling their products or their services through our channels, improving our service offering to our customers, right? These 3 ways are the ways in which we envision partnerships, and all of them, and this is vital, all of them in every partnership, every relationship that we build with any partner, we have to always bear in mind that there's gotta be this gotta be a 4-win scenario. Number one, of course, the partner has to win something in this relationship. The bank, for sure. Most importantly, than the bank and the partner, is gonna be the customer winning something, winning the possibility of getting a better product or a better servicing from ourselves. And last but not least, we are now incorporating, and I think this is something that is becoming more common day by day, which is the environment has to also get a positive impact on this relationship, right? So it's important to bear in mind that it's not anymore a win-win scenario. It's a win-win-win-win scenario, right? So it's the bank, the customer, the partner, and the environment.
All that winning.
Thank you, Diego. So I wanted to move on to the I want to say like a classic question of the culture and the mindset. But listening to Diego specifically, let's actually get a little bit deeper already, and let's assume that culturally, to embrace innovation and collaboration with external bodies, of the institution, is already a challenge. Okay, and one could argue is the biggest challenge or not? It doesn't really matter. But what is certain is that it is complicated and challenging to make this innovation culture pervasive throughout all the bank, and not only a sort of a matter close to the innovation team, or the funding team, or the 2 or 3 guys with the innovation name on their business card. By the way, and this is for our auditors, I don't know if you realize how lucky we are to have 4 people representing 4 global institutions in 4 different countries. So there is actually very little competition amongst them. So we can have the cleanest sort of possible dialogue today. We should actually treasure this. I'm actually really grateful for you guys to sort of be part of this conversation. Gavin, I know that this culture mindset being pervasive, in this innovation culture is something very close to your heart. And I also love your zero bullshit sort of talk. So that's why I'm starting by you.
Oh, yeah. Look, culture is this huge, big topic, and it spans in a couple of different ways. But when I think about how banks mature and get ready for fintech or open banking or the space, I always think about it in these kind of 3 different kind of buckets of maturity, right? I think the first bucket is, look, we want to build a network of partners, in the fintech space. We want to build our ecosystem. We want to get access to fintechs. We want to get access to experts, and we want to be able to tap into the fintech ecosystem to solve our problems. And that seems to me, certainly what I see from the banks I'm aware of, that feels like kind of ground zero where most banks kind of start building that ecosystem, right? The second bucket I see then is kind of this idea, this path to productivity. And I think we kind of talked about this with collaboration falls under this. Like, how can we, once we find a fintech, how can we commercialize that fintech in the organization in a way that makes sense? We're not wasting everyone's time, and we're as efficient as possible with everyone's time and energy. And that could be down from our technology rails and our APIs and consent management and all the whole kind of shebang in terms of the fintech funnel that goes with that. That's super important, right? And we're maturing very well in that space, and a lot of banks are. But I think the third bucket, to the point of this, the third bucket, which I think is the elephant in the room and super important, is the internal fintech culture within an organization. Like, teams in the bank have to understand the potential and value of fintech. They have to be aware of what's happening in the world in terms of open banking. They have to get excited. They have to really care about this, right? They have to know it's important to their roles and important to the bank moving forward. And I think without that fintech culture, if teams in the bank aren't reaching for fintech, as I say, well, what's the point in having the ability to have a great network and do pitch days and accelerators, and then have all these great kind of like technology platforms that we can bring fintechs to life? I mean, it's driven by people ultimately. It's not driven by the fintech. So we have to have an internal strong fintech culture. And we work hard in FAB to build that from the point of view of having certain events, and some key speakers come in from time to time, as you know, Matteo. We have a fintech curriculum inside the bank that we just launched as well. And there's a whole kind of palette of stuff that we do to support and drive and bring fintech closer to teams. But I really think fintech culture is of the utmost importance. I think it's often, as I said, the last thing that banks tend to consider, because it's very easy to do fintech for the sake of fintech. Very, very easy to get busy with all this stuff, right? Because it's all over the place. And I think culturally to me is definitely a hot topic and a sweet spot for us in terms of what we're working on.
Yeah, and maybe to build, I like your approach with phase of maturity and buckets of maturity, and I will maybe add about also the progressivity of the cultural shifts in the from one side and from the other side to be able to make the marriage work. And in our case, I think there are two different scenarios. The first one is when we are trying to, let's say, address a pain point of our existing customer basis. We have a customer basis which is both very loyal and very demanding because it's a very digital customer basis. It's a very appetite to innovation customer basis. And so definitely being there served in a very digital business model, such as Boursorama, for example, which is the first online bank in France, or being served in more traditional organization or banking setups, they always need more innovative offer, and we need to be able to answer them, to cooperate with fintechs and to build partnerships, and to build at the beginning commercial partnerships. Then we come to new, better each other, and then we will maybe go into a minority investment, and it will be again an opportunity for the team to know better each other and to understand better the cultural gap and so on. And maybe we will go until a full acquisition, for example. This is the kind of story we lived with Shine, for example, or with Rizoka, which is a platform selling where you can buy your used case, your used car, for example. So these are progressive relationships that have been built around the need of the customer and around let's say, the common vision to be the best let's say, partner for the customer's project. This is one scenario. And the other scenario, I think, is also when we decided to partner with a fintech to attack a new market. I take maybe the example here of Trezor. So Trezor, if you know, it's the fintech of the fintech. So they provide bank as a service services to neobanks and fintechs. Definitely here we were in a situation where they were attacking a market segment where we were not at the time where we started to talk together. And we shared the vision that this customer segment was to grow and that there will be a need for the bank to address this customer we didn't know how to address at that time. And also a need from Trezor to be able to offer also a continuum to the customer when they start to be bigger and they will need, let's say, other kind of services that Trezor was not, let's say, was not meant to offer. It was more traditional banking. And I think this is also a very powerful way to overcome cultural gaps when we definitely share a vision of the, let's say, the way the market is evolving. And we understand together that we have complementary forces to be able to offer this continuum of services during all the life of the new customer.
I'm really curious to understand the point of view of Euroclear, Edwin, because this is something that is true across all markets and all verticals. You're bringing a very precious point on the capital markets perspective. So, tell us more.
Yeah, and it's a challenge from a Euroclear perspective, and it's not only a challenge from a cultural perspective. I see it broader. I mean, on one hand side, as a Euroclear, your market infrastructure, you're taking risk out of the market. So you have clients who are a client of you because you are very strong in managing risk. You're very strong in executing your current business, and so you have organized your internal organization, but also the expectations from the market go into that direction. And when you are innovating, be it internal incubation or be it with with startups, there you need to suddenly create a different mindset. You need to be able to work much more incremental, experiment more, but then clients and should also understand that your first product is not the perfect product. It's an MVP. And so there's indeed a tension, and people should be a little bit of schizophrenic, whereby for your core business, you really are seen as the one managing the risk, putting in place strong controls, being very disciplined in execution, but then at the same time searching for new opportunities. You still need to be able to experiment and to trial and test, and that tension, it's not always easy to manage. And then I think, Euroclear is a small company, but still we are composed of a number of different legal entities, and I think that's with probably many of us. I think there's also the decision-making process. I mean, the startups, they move fast, they take fast decisions, whilst there as an incumbent, you don't always follow the speed that they are expecting from you.
Just to build up on what my colleagues have just said, there's two concepts that I really liked of what they all mentioned. One of them is that we, especially at banks, we should have a kind of fintech mentality or fintech mindset, right? I think it was Gavin that said that. And I cannot agree more on that. And also the other concept is fintech's forces and banks' forces are somehow complementary, right? So we can complement each other. And by working together, we have to acknowledge that we can go way faster and way, beyond the limits that we separately have. And there's one other concept that I want to link to these two comments that I just said. That is that I think we all should be at our positions in our banks. We should all be always, all the time, entrepreneurs. Right, that's the way we should all, be looking at these type of collaborations. We should all be looking at this type of, problems, if you will. We have to keep in mind that we are the, challengers internally in our companies, and we should all collaborate and help to change these culture differences. And honestly, I think of myself every time I wake up. I think of myself as an entrepreneur working for a really big corporation, and that helps me a lot. Like in my day-to-day, every time I sit down with every business unit, with every support function, the way I interact with any of them is if I'm running my own startup within the bank, and I think that way it's really a good way, an easy way to share and to extend this mindset of becoming a fintech in your own company. And just to finish, one other thing I like to add is that perhaps definitely culture is one of the biggest challenges, if not the biggest. But you can name some other hurdles coming out from the cultural differences. Things like we all know, right? Agility, risk aversion, flexibility, etc., etc., etc. But again, if we put ourselves the hat of entrepreneurs, I think there's a lot of things we can overcome, even though we are working for big corporations.
It is true, actually, and amongst the typical hurdles, there is one that I want to dive in, but maybe super quickly with a couple of high level thoughts, which is the culture of failure, right? And again, I don't want to sort of revisit the classic of innovation, but the truth is that when you do a face-to-face, especially as you know, I'm do a lot of speaking, and when I talk about the culture of failure, everyone is nodding, everyone agrees that we should allow people to fail, that we should allow experimenting. But truth is that nobody likes when a project fails, a startup that you wanted to deal with goes ballistic or belly up, or like an investment fails, or sort of a prototype that you started working in prove to be not linkable or sort of digestible with the legacy infrastructure that you have because IT forgot to perform the intrusion testing, and all of a sudden the startup didn't pass and you cannot collaborate. So there is the big umbrella culture of failure. There are the different possible way of failing, and there are the challenges for people like you that, of course, have to embrace this sort of perspective, how to sell it, up and down internally. So probably the CEO or like they will get it in principle. But then the moment that there is a hard test, raise your hands who wants to start talking about it whilst I finish the question. This is the moment where, it gets real. And when it gets real, this is when the innovation side of the company gets hard tested. Gavin.
Failure. Big topic. Look, a couple of things I'll say on failure is just in terms of context. The way we set up the innovation lab, we were very careful and very conscious to set the lab up as a function that would drive tangible change and make innovation real and not kind of fluffy and something in the atmosphere, right? The lab has been moving for 3 years, right? And if you Google Fabric, you won't really find us anywhere. We're only just now starting to stick our heads above the sand because we got something worth talking about. From the get-go, we were so clear that we wanted to do something real and drive real tangible innovation to be a valuable lab. We can talk about that more in a minute. But in the context of fintech, the way we set up our fintech service is we really wanted to focus, as we've been mentioning earlier, we wanted to focus on key problems that teams have that we all agree that fintech can solve. So straight away from the get-go, when you look at that, you're looking at finite problems that can be boxed, and we're looking for a solution. And our chances of succeeding after we look at a number of fintechs and qualify them and POC them and execute them, we're in a pretty healthy space, right? So we really focus on that for the first kind of 1 or 2 years while we're getting this whole fintech machine moving, while we're getting this innovation machine moving. It was really important to hit the sweet spot, right? I think what we're finding now, which is important, and it's by design, is that now the portfolio, how we approach fintech is kind of 50% now kind of problem centric. And now we're opening it up to more 50% what's out there, what's interesting, what's potentially disruptive, what has a bigger chance of unknown and a bigger chance of maybe not being so successful, but can obviously the whole idea of failing fast and failing successfully in the right way. We bring that into the play as well, But definitely it's been a tale of two halves for us. We started focused on making sure we're going to be successful with fintech and then failing on the POCs as fast as possible. But now we're in a much more exploratory space. We're looking at big disruptive new ideas, new business models, much more open banking centric. And that to me is very exciting, but that comes with a different way of managing how you, those gates of kind of like success and those gates of should you move on to the next step as well,
I tend to agree. Failing happy, I think it's not that obvious. I mean, you imagine somebody who has been spending a lot of energy with a lot of passion to progress his idea and pursue the opportunity, and then at a certain point in time needs to give up. It's hard at that moment to feel happy. Now, what I try to do, because it's not something that has been demonstrated too much, but what I try to do is to focus very much on the learning. So when we start a new initiative, we focus on incremental changes, experimenting, trying to learn, and making sure that out of the learning, we feel some happiness. We feel satisfaction because we have learned, and we also take that in a very objective way to then decide how to be transparent. Now, that is for the team itself, towards your stakeholders and your shareholders. I think being transparent when you start a new opportunity, what are the most riskiest assumptions? How are you going to test them? And how are you going to learn from your experimentation? That until now I think works best, because at least at the moment that you might need to decide to stop the initiative, you have not spent huge amounts of money. You have done it in an incremental way, step by step. That I think is what works best for us at the moment.
Noémie, your last words, please.
Yeah, and maybe let's say as a kind of supervision hat of what was said, I think what is also very important, because the difficulty with failure is that at some point, you have to keep the trust of your stakeholders. So you have to keep the trust from general management, from your board of administrators, from your investors. So I think first question is, what is success and what is failure? And I think it's very important to define at the very beginning what are the criteria of success or failure. And these criteria will be different if you work with a fintech or if you're in internal venturing with the purpose of transforming existing business model, where, let's say, you will probably expect a financial result in 2 or 3 years. Rather, when you are totally building a new business model where probably you will not follow the same metrics, and let's say success won't mean the same thing as on the first case. So I think this is the first important thing, to be very clear on what are the success or the failure, let's say, markers, and to be very transparent on it. And the second thing probably is to let's say, to keep discipline. And to be honest, when the KPI or when the OKR is not achieved, it's not achieved. I mean, you can say that there are many explanations to it, and you can say that we can try it another way, and that's right. But let's be honest on the fact that it has not given the result where I expected it will give, and take all the lessons, and let's say maybe relaunch the same initiative. And again, I think it's very important to be very conscious. Are you in the way of transforming existing business model, or are you in the way of building something totally new? And in the second case, probably you will need to have quite a lot of, let's say, fuel of the pipeline. Once on the first cases, you will need to focus on the more productive initiative and partnerships.
Today is one of these days when I say, Jesus, twice half an hour is a bit short for such a debate. But hey, let's try to, I know that you are a little bit beyond the first half an hour. Let's wrap it up at the first half of the show. Stay with us. We're coming back with more questions. And it's a wrap.
The FTS Group builds innovation ecosystems. We engage incumbents, investors, entrepreneurs, technology partners, and regulators to build trusted and connected fintech tribes around the world. We firmly believe that innovation in financial services will truly improve people's lives. Learn more on ftsgroup.eu.
Welcome back to show 86, Open Innovation Series. We completely went ballistic on the first half of the show, much longer than expected, but that's because the dialogue and the conversation has proven itself to be super insightful. So, let's come back to what is the perfect recipe for open innovation. I could name different pillars of it. The funding side of it, the deal flow side of it, the internal innovation capability side of it, the integration with the strategy, the profitability. There are plenty of components. And I know by a fact that all of you have different sort of vision as well as a sort of internal settings and capabilities. I would like you to share this, but most importantly, what is your experience and views on all these different pillars? And maybe let's start with, I want to say, the older footprint, of this, because, Santander Innoventures started more or less with my first fund 3 lives ago, and has been evolved, and now is at least the funding part, for example, is separated. So, fascinating story. Diego, why don't you give us your recipe for open innovation?
Sure. And I really like the concept, right? So the perfect recipe, I think that's kind of a unicorn, right? Kind of concept. It doesn't exist, maybe. But I can tell, and I can talk about my own experience. Definitely, as you said, Matteo, at Santander, we have a lot of experience, right, in open innovation, pursuing different paths, right, and doing different types of initiatives. In the past, we have had some, accelerators, incubation types of ideas. We do have corporate venture capital, which is Mouro Capital, formerly known as Santander Ventures, as you mentioned. And let me just do a little bit a bit of a deep dive in the initiative that I'm running, which is called FinTech Station. So at FinTech Station, what we do is, as I was saying before, partnerships, right? So I'm not saying this is the perfect recipe, for sure, not at all, but I can definitely tell that this one works for us pretty well so far. And I think the key component or the key ingredient to success in this recipe is having an open and honest community of internally of people that will be your stakeholders at every moment in the life of any initiative, right? So the first thing we've done once we launched this initiative like a year and a half ago was to build this internal community by identifying what we call ambassadors of, these are mainly stakeholders, people that has the experience of working with fintech companies or startups in their local markets. So we identify this ambassador in every market in which we operate. And through them, we started to have really deep and meaningful conversations in order to understand what are their strategic plans, what are they looking for, what are their pain points, et cetera, right? And it's quite interesting because after your second or third conversation, you start realizing that the patterns are there in the sense of the problems or the pain points that a small market of within your company may have. Most likely are going to be the same pain points and needs that your biggest market in your company will have, right? So once you identify those patterns, then you have sufficient material, sufficient information to turn around and go and look for those best tech solutions or partners in order to come in and hopefully solve for those problems, right? And we started doing that, again, a year and a half ago. It worked pretty well. We've done this exercise of, having these deep, meaningful conversations, understanding their needs. And now we are in a cycle that is kind of a wheel that is permanently rolling, in the sense that we don't necessarily have to have these really deep conversations every time, right? So now we are like a focus point. And every time some of our business units have any kind of need that they feel they can solve by connecting with a tech solution, they will come to us, and we will immediately scout for the best shortlist of solutions to that problem. But also that works in a two-way, right? So it's not only inside out, which means the units feeding us with problems, and then we turning around and looking for solutions. But I think in open innovation, it's really important to keep your eyes open and to keep your mind open. So since we are, again, permanently in touch with the ecosystem, we are being presented every single day. I think this happens to all of you guys. Like, your LinkedIns are full of messages from companies trying to reach out and sell their products to your companies. So this happens to every one of us. Plus, we work with lots of partners that can introduce companies all the time to us. So I think it's also important and relevant to have this vision of outside in. Every time we identify a company that we feel, given our knowledge and the vision that we have for the needs of our group, every time we meet a company that could be useful, could be interesting and relevant for the company, we turn around and do the intros, right? So outside in. That's my view. So I think partnerships is a really good way. It sits in the middle. It's not incubation. It's not acceleration. It's not investment. It sits in between. It's important to keep aligned, in your goals and objectives with all the parties internally. But it's just one more way in order to, face this problem of open innovation.
Edwin.
Yeah, I think. First of all, I think at Euroclear we are not. We have not built a CVC arm, because we're not looking at fintechs for the pure financial return. So if you're looking at startup and fintechs, it's really to support our growth strategy, and so that's where it all starts from a fintech scouting perspective, the first thing that we have done at the company level is to align on the fintech investment teams. Where do we really, what are the innovation opportunity spaces that we want to pursue, and where do we believe that calling upon external help would actually allow us to accelerate the realization of that opportunity. So that's where we start, and then you start with the pipeline building, and there we have the traditional ways of looking and screening fintechs. But the thing that from experience I believe is needs to weigh a lot in your decision are the people. It's really about who are the people that are part of that startup. Are they subject matter experts? Do they have the right entrepreneurial skills? Do they have the drive, the passion for the subject to realize their objective? And then it depends a little bit as well on the level of maturity. Sometimes they're a little bit they're already well advanced. But we recently we partnered with a startup who were really at the beginning, at the very beginning, and where we helped them incubating. And that's also something I've learned over the past couple of years. There is a trap that if you look at fintechs, is that they are very, very strong in marketing their solution, but you need to really do the due diligence, or are they after a problem that is worth solving? So that for me is a learning. And then the other way around, because this is very much a pull model, but that also we also are more and more organizing hackathons where we mix internals and externals. We will test a hackathon later this year where we actually expose a challenge to only startups. And I think that as well, it actually demonstrates that you need to try this from different angles. There is, for me, not a single recipe that works. You need to try different things, and sometimes it works and sometimes it doesn't work.
Actually,
Yeah.
before Noémie, before you kick in, and then Gavin, the 3 days ago I gave a speech to the Italian Insurance Association, and it was a guy, sort of a small consulting company, who presented an open innovation sort of interview. They've done 200 corporates, okay, and there were a couple of I never thought about it, but they put themselves into the shoes of a startup, and most of the startups, they actually wanted to collaborate with the bank to become the clients of the bank, not to build the solution together. So, sort of echoing what Edwin was saying, that you need to do the due diligence in a smart way, because sometimes you get a startup that they are only seeing you big guys as a potential client, but not as a potential partners to build the solution together, right? And then there were a couple of other insights about reason why they would launch an open innovation project, how many projects a given corporation can stand per year, and then we saw that there are very few that went over the 2 or 3. Most of the companies, they could only handle one open innovation project per year because of the implication of bringing the team in, and the legacy sort of a connection with the IT backend and so forth. Noémie, tell us a little bit your point of view.
Yeah, I think I wanted to build on what Edwin was saying, but it's interesting also what you are saying. I think it's very important to distinguish again the what and the how. I mean, I think the objective is the same. Is to perform the digital transformation or building the new business model. And I think to align everyone in a big corporate, you need to have a quite clear and shared focused on the strategic area where you want to take the bets. This is the first thing. And I think this needs to be very widely shared and probably co-built with a kind of top executive or let's say future leaders of the bank. This is what we have done. And I think it was very, very performing. And then you have different levers to execute it. Of course, you are right, Matteo. Open innovation is one lever to execute it, but it has to be clear what is partner and what is a client and supplier relationship. So this can be a solution, just to buy something and to use something as it is. But this is not really partnerships. And I think for partnerships, of course, we need specific organization to build them, and we have to learn it as corporate, because it's not so obvious to be able to work in partnership and co-build really new offers with partners. And this is what we do, for example, with the Global Market Incubator on the capital market side. And for this, it has been very useful also to start with the professional, to start with the Sway, for example, in France. And then you can also have the corporate building venturing. What we have done with our internal startup call, for example, was a very good example of the way that it could be positive in two ways. That means that some initiatives are scaled up and are definitely very good internal startup. But even for the one who has not scaled up, it has been an incredible raise in the global maturity of the corporation to be able to cooperate with this kind of actors. And to react also on what Edwin was saying, in Société Générale, we have the funding part with the investment. We have started to invest in fintechs in 2015, so it's quite a long time ago. And now through our fund, Société Générale Venturing, we do only strategic investment. I mean, not financial investment, to be clear about what you were saying, Edwin. So we are only doing the investment if we see very big synergies with our businesses. And it is seen, let's say, as one way to perform our innovation and digital strategy, but at the same, let's say, level of the other ones, being internal venturing and partnerships. So I think there is no problem in synthesis. I think there is no problem to have, let's say, different ingredients in your recipe. But what is very important is to have a consistency in terms of what you want to build, what you want to do. And I think it's part of the job of innovation division for the group to, let's say, ensure this global efficiency and consistency.
Yeah, I'll jump in there and just talk a little bit about FAB. It's still early days for our venture journey, so I don't have much kind of additional value than the team can add. But I can talk maybe just a little bit about our corporate innovation kind of mechanic. And as I said, Fabric was set up 3 years ago. We were very, very clear from day one what we wanted to be and what we didn't want to be. I mean, we've all been around the block long enough to know, Innovation 1.0 is, this awesome group of people with funky beards coming up with the most amazing ideas that don't commercialize across the bank for various reasons, right? And we've learned over the years that this is not the way to do, silo cave innovation. A lab filled with pepper robots and post-its is not innovation. And I refuse to have any pepper robots in my lab, right? So I'm proud to say that, right? No peppers. So definitely the way we set up the lab and the way we continue to work in the lab is, look, by no means are we saying there's not innovative people across the bank. The bank is filled with really talented, rich, innovative people. What we've done at the Fabric team is we've kind of defined a kind of a set of services, which we call the innovation toolkit. This is just, we've commoditized a set of services across design and UX research and fintech and kind of like strategy. And we kind of have commoditize these and made them very familiar with teams across the bank. And then we make these services available to various different teams depending on what they're working on. So let's say the gentleman in charge of the FAB mobile application. Well, that's his app, right? It's his responsibility. It's his KPIs. It's his budget. By no means are we here to interfere in any shape or form. But by the way, I can give you a block of fintech or a block of UX research, or I can give you a block of service design, and we can help you to drive your innovation agenda. And hopefully you might learn some new tricks along the way. And that changes the culture kind of slowly over time. So the way that we're approaching innovation, and we have done over the last couple of years, is we're here to support and augment teams and introduce new ways of working and to make sure it's as tangible as it possibly can. So bringing that back then to fintech, the fintech services that we have, we've got kind of two core kind of fintech services. One is essentially tapping our network. We curate and manage a network of about 14, 15 partners across the world, whereby if we have a problem, we can shape that into a brief with the team. We can ping the network and go through the kind of funnel of activity to, qualify and quantify and source and all the usual stuff that we do, right? And then the second service that we have with teams is we can help them to kind of POC and bring it to life and manage some of the kind of a cultural relationships of bringing someone from the outside, like a fintech, into the bank, and supporting the fintech's journey into the bank and supporting the team's journey to get best value and build a business case then with the fintech. And then what happens as there's a fit slowly made, we step back, and then obviously then the core IT team step in and plumb it in and take it forward as a traditional kind of IT type of project. So the innovation machine for us is about these services, about making them available, about championing them, supporting them, putting training around them, making teams available. And what we find is that the first time, let me just talk about UX research, because it's maybe something that everyone can maybe relate to. If we're doing some customer testing for, let's say, a new app or a new fintech experience, the first time we provide customer research to a team in the bank, it might feel a little bit strange because we're asking them to write a brief in a certain way. We're teaching them about the importance of UX research. We might even be asking them to come in and sit behind the glass and listen to some interviews. And they're not used to working in that way, right? So the first time is a little bit alien. But then the second time they kind of go, oh, I get this, and I see the value, and I'm making changes. And now people are reaching out to us and saying, hey, look, I want 3 blocks of UX research next week. I want 2 blocks of fintech. So that is change. That's innovation change happening. That's tangible over time, And again, we were just so just from the get-go, I can't stress how hard it is, or how important it was to us to make sure it was real and tangible and people could reach out and touch it. I had to make it like a legit, real kind of innovation lab, and I think we've done a pretty good job on that over the last few years. And now I think as we're moving into more kind of big thinking, more disruptive spaces, looking at the idea of venture, looking at the idea of more strategic partnerships, the foundation is in place, the trust is in place, the relationships are in place, and it gives us a much better footing to do much bigger and more interesting things.
Thank you, Gavin. So I want to use the last 2 or 3 minutes of the show to talk about a topic that we didn't discuss previously. Otherwise, there is no fun if you don't have a surprise, like a surprise question. And actually, it was inspired of what Gavin, so it's your fault, basically, awesome, touched about in your last in your last intervention. And so 2008. InnoTribe within Swift, the motto of InnoTribe was enabling collaborative innovation, right? And you are for like a different kind of financial institutions, actually, to be precise, 3 financial institutions and 1 market infrastructure. But is it just sort of each company with its own sort of innovation garden, or how are you guys looking to collaborate with some of your peers, maybe like not in the same region, but isn't that like, for example, there are actually spaces for innovation. I'm thinking of like cybersecurity or standardization or trade. So there are spaces where it makes no sense for one of you to invest when the best solution at it is when this is like collaboratively used. And I always bring this example so our auditors can relate to. Think of if each bank of the planet would be able to contribute to a central anonymous database for cyber attacks. Right? And then that common infrastructure all of a sudden becomes a central database for all cybersecurity's knowledge so that all the IT in the world can feel safer, right? So that's a maybe trivial example of a collaborative innovation. And yet, I don't think this is happening just yet, or maybe not happening enough. And here, I wanna have your own opinion. I don't want to have Société Générale or FAB or Euroclear or Santander opinion. I want to genuinely think what's your view on the collaboration on collaboration sort of aspect of it, and say a minute each. Want to give this a shot? Edwin, you market infrastructure. You're collaborative by nature.
Yeah, it's true. We are collaborative by nature. But if I had one wish, is to push that co-creation with peers, that co-creation with clients, even a level further. Today, we are already moving in the right direction, where we are We are using our the relationship with our clients to pilot test some of the new service developments, but I think we can go much further. And I think it's collaborating together, not only between the market infrastructure, but also with the other financial institutions to solve the real market problems. And cybersecurity is one of them. But I think you have the KYC, you have many other market problems that need solving. And I think spending our energies together to innovate together, I think that would help a lot. Yeah.
Diego, you go next. And by the way, little anecdote. Santander and BBVA are like two partners, two banks, global, that were both sponsoring our events in Spain. And it is the only country where they say, no. If Santander is in, BBVA won't go, or if BBVA wins, Santander won't go. It was like the innovation fintech places, and Spain particularly, was one of the examples, and the counter example is Italy. And there is no representative of Italy marketplace here, where typically the big banks were looking at each other like not in a super collaborative way. Diego.
Yeah, thank you, Matteo. No, I think that there's already a few scenarios, a few spaces for collaboration between banks. And in fact, as you mentioned, this is already happening. It's nothing new. We have some private spaces where we collaborate with banks that doesn't necessarily compete in our footprint, where we can share some learnings and some ideas, as you said, right, in non-compete areas like cybersecurity, for instance, right? And we do that. But also there's some other public cases that I can think of, like, on the blockchain space, there's some consortiums of banks and other types of other industries, companies, where we as Santander are actively collaborating with many other banks in the industry, even some Spanish banks as well, the biggest Spanish banks. And this case is Alastria, where the backbone is blockchain, right? So everything around building DeFi solutions. And it's public information, and we are there, and we are actively collaborating, and it's happening. So
yeah. But DeFi, one could argue that DeFi is the feature, doesn't count. But I'm joke. I'm half a joke.
Well, but if it's the future, it's innovation. Therefore, it counts, right? So
true. It does. Noémie.
Yeah, I think you're right. On the business part, I think blockchain is the best example of the way we might cooperate around also more, explorative businesses, being digital assets or trade or commodity finance, which has always required different stakeholders, and it's just a new way to do it, in a more massive, impactful way. Another way where I think there is a very big future, because we are talking about big investments, and I think there will be a need to share this investment at some point, is of course around data qualification, being on the risk management side, as you were saying, about maybe KYC or detection of new fraud patterns, and this is already now enabled by new technologies such as private enhancement technology and so on. So this is, let's say, more accessible because we can share data without sharing data, And there is also a big field of application of this technology in terms of operation efficiency, to be also able, to increase the quality of our client database and so on. Again, without sharing at none point the data of the individual customer, but just receiving, let's say, an indicator saying, okay, your database, this line of your database is a good quality or seems not to be in the consensus, So these are definitely, I think, a very big field of increase of risk management and efficiency to the benefit to the customer. So here I see cooperation between banks, even if they are working on the same, geographical footprint, because if not, I think exchange are already happening. If we don't compete, we have definitely exchange. I've made a Lex in Santander last year year, and it was very open because we don't play on the same market. And maybe the last theme that we have not discussed is also a cooperation between industries, because I think in a digital world, there is a lot to do by sharing with other industries. Maybe you have seen yesterday the news of Capgemini and Orange and Generali, I think, and another player who was building an incubator that they will co-lead around health and digital health and so on. Definitely, I think this is the beginning of a trend that we can also cooperate across sectors on specific topics.
Gavin, your view also, given the fact, and it's going to be the final comment, knowing as well that open banking is kind of nascent in the region, so it gives a huge opportunity for collaboration, right? What's your view?
Yeah, look, open banking is in its infancy here in the region. Bahrain just went live with something kind of this year that's very similar to back in the UK and Europe. KSA is going to launch something, I believe, next year. And here in UAE, it's still in the early stages of making any form of formal releases by the central bank. But it is coming, and everyone's getting ready for it. And banks are aggressively already working with APIs and consent management and thinking about new business models. Look, there's a couple of things I'll throw in on this region just to give a bit of flavor. There is some very interesting collaboration happening on trade and blockchain. There was a program called UTC, which is UAE Trade Connect, which is launched I think in April this year. I think there's about 9 banks in the region involved in that. So it's a lovely example of what we're speaking about. The second thing I'll say is that what's really interesting and exciting about this part of the world, particularly when you look at Abu Dhabi or Dubai or even as far as Saudi and stuff, is that the idea and the promise of open banking and the promise of us as consumers being able to do more with our data. It just happens to be starting in banking. Obviously, it goes across multiple industries. Us being able to do more with our data and that coming from the top down on a government federal level, that is happening, and that thinking is happening. And the idea of controlling and using your data in more interesting ways, it's happening at a rapid pace in this part of the world. And I would argue we'll jump and leapfrog what's happening in other parts of the world just because the way way we're set up as a part of the world and countries and government structure and ambitious movements towards certain visions that are in place. So data and the opportunity with data is going to be very exciting, very fast here. I mean, in the UAE and Abu Dhabi, Dubai, and the other Emirates, very recently we just went live with what was called UAE Pass, which is the government federal digital identity. And digital identity is obviously the keystone to a digital economy, right? So that's super cool, right? And then the final thing I'll say as well is that we're very fortunate in Abu Dhabi, particularly. I feel, in my own humble opinion, I feel Abu Dhabi is going to become the fintech nucleus for the region in the next kind of 5 years or so. Our local kind of financial kind of market called ADGM, Abu Dhabi Global Markets, has just gone live with this crazy kind of regulatory sandbox called Digital Lab. And it's almost like a regulatory sandbox in steroids. It's almost something like what they're doing in Singapore, where it could potentially be this huge proxy where all innovation and all various different services and microservices can come together and we can build something interesting on that. And that really is just kind of finding its feet right now. And we're only just starting to kind of ramp up our footprint on the Digital Lab. But it's really exciting. And it's super exciting because you've seen what's happened in other parts of the world. You can kind of go, oh, that this kind of feels like what's happening, and you're there and you kind of know what the potential is, and you're there at the very, very beginning, and it's really exciting. It's almost like a privilege to be here at this time as it's developing. So I'm really excited about that potential for the ecosystem and for the industry to come together, not just banking, but way beyond banking and multiple verticals.
Thank you, Gavin. Guys, I don't think I could have wished for a better way to open up this new Open Innovation Series at Breaking Banks Europe. Thank you so much for being with us today. Guys, this is a slightly longer episode, but I think it was definitely worth it. Thank you so much, Noémie, Edwin, Gavin, and Diego, for being with us today. Stay tuned on Breaking Banks EU. Thank you very much, guys.
Thanks,
Thank
guys.
you.
Thank you.
Thank you very much.
Thank you.
Bye-bye.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.